Good morning, good afternoon, or good evening, depending on your perspective on the world. And welcome back. This is Brandon Wendell with you once again, taking a look at the energy markets. So, we're going to go ahead and do some analysis here. I'm starting off with crude oil on a continuous contract and a weekly chart. And the reason why is I'm going back in time here to about 2018. You notice that we're reaching up right now to those old levels that we see. And here's the high. Now, it's not really a good supply zone, but it is a previous high. Let me zoom in on that area just so you get a little bit better picture of it. There it is, and you can see why it's not a zone. This is not a basing candle, although it is a little bit of a stalling before you had really good selling pressure. So if we were to mark this off as if it were a zone, it still could cause us some problems as we're moving up there. Let's see which one. Oops. Should have removed the other line first. Let's do that. Oh, deleted the wrong line. That's okay. I can do it again. There we go. Technology, isn't it wonderful? So there we are. We've got that 83, 35, 87, 30. And then, of course, we go back even further. Oh, that's kind of weird. Not sure what's going on, but you can see we were in this area once before, also in 2015. If we are able to break through that for whatever reason, I don't think we are this week, by the way. You do see there is another zone at 97, way up there. So better fill up those tanks quick, right? And also a little bit higher, it looks like you got drop, base, drop. And when is this? 2014 at 109. So, whew, man, that'd be kind of ugly. Again, let me put those lines back. For some reason, they didn't take. Here we are. This is that 2018 high. And as you can see, the reason why I'm a little bit bearish on the market at this point is as we're coming into that level, I use the RSI as a momentum indicator. And typically, when you get something like this where prices are making highs, and again, I clicked wrong. So price is making a new high, but the momentum is not stronger, it's weaker. That's called a negative divergence, and it usually leads to a correction, a pullback, like you see here. Well, we've got the same thing going on right now. Once again, what does Yogi Berra say? Deja vu all over again. So there it is, new high in price, but once again, the indicator is saying we don't really have the momentum to be up here. We should probably pull back. So it's suggesting a correction. And since we're looking at this, let's go to the specific contract now. I'm going to go down to the daily chart. So it's CL, and we're going to look at the 2021 December contract. There we go. Let me clean up a little bit of stuff here that I had going on. Actually, let's clean it all up. Like start with a fresh chart. And there we go. So now we'll go down to the daily time frame, and here we are. So the reason why I came down here is I want to see what that last retracement looked like and compare it to what we might get for this one. So if we take a look at some of the impulses that we have the move up right here. Actually, I might have to include a little bit more than that. I can check though. I think it was on the weekly chart a little bit bigger for the impulse. To be fair, like I said, that weekly impulse really started. Come on. Actually, let's just do the weekly chart. It'll be easier to do it. All right, so here we are. And again, we had, there it was, impulse up, correction down, right? Before our current impulse up. So we have the move up that was interrupted by the pullback. Although, actually, as I look at this, could be impulse, correction, impulse, correction, impulse. You can measure this many different ways. So it's a little bit of subjectivity going on here, but I'm going to go with what I got. And I'm going to put in my retracement values, which for some reason the default in this program is incorrect. They do 75. It's supposed to be 78.6 or 76.4 some people use, because that is the inverse of this 23.6. You see up here. Also put in the ratios so we can see them. And yeah, it didn't actually turn at one of the ratio levels. Unless I go perhaps a little bit lower. Let's see. Nope, doesn't really line up. So Fibonacci's didn't really help there. What if I went from this move up? There it did. You can see my suspicions were confirmed. I was saying maybe this was the correction for this impulse, and it was actually 78.6% retracement. So if we start stumbling now, remember the weekly chart was showing you that negative divergence. You can see it here in my chart that I'm looking at because we're still on the weekly. So if we start pulling back, we now measure using Fibonacci retracements where we might be pulling back to. And we have several possible targets. We can go down to the daily time frame to fine tune this, because often the Fibonacci levels that line up with actual demand zones are going to be the best. So starting current price, looking left and down, I'm noticing that this is probably the best demand zone down here. We have a drop base rally right there. Good buying pressure going up and a Fibonacci level in the middle of it. Anything else? Let's see. We got rally, base, 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 and rally actually does have follow through. So we could do something with that. Seeing that, let's see, the high here is 75.35. The close is 75.45, so that's not included. That's the basing. And that Fibonacci level is kind of low in the zone, so it may not be able to help. We do have drop, base, base, no real rally. We have rally, base, base, and a little rally. That might be your first target on the pullback. We'll have to keep an eye out. Rally, base, base, and rally with follow through. But the strongest buying pressure is really down here by the 61.8% retracement. I'm going to ignore this one. Again, it wasn't really strong, and kind of focus on either a pullback to 71 or a pullback to 80. We're almost at the 80 point. So let's go down to the smaller time frame here. See, we are on the daily. We'll go down to the 4 hour. A little more detail. And, well, not sure if this is going to be a complex head and shoulders. We kind of have a bunch of little left shoulders ahead and then a right shoulder starting to form. And I don't know, it's kind of weird. You got, it's not really a good supply zone. I don't really have anything there. Let's try to see what's going on. But if this happens to be some sort of complex head and shoulders, we'll get another bounce before we break down. That'll take us through another week, so we don't have to worry about that. But if we do break down because of the weakness in the trend, then we may be heading down pretty soon, because it actually, you know what it's going to come down to? I was noticing this high was above 60. What we need to see is if we're going to drop, we need to make a lower high and lower low after the last candle here. So Sunday night going into Monday, if for whatever reason we make a lower high, if we don't break that high, we make a lower low, then you would have been putting in a high below 60 on the RSI, and that's a bearish warning signal. So if you wanted to be aggressive on the short with crude oil, again, this is extremely aggressive. What the opportunity would be is once a lower high and lower low is made on this 4 hour chart, basically, once you break 83.20, you got to have a lower high first, because if you make a higher high, all bets are off. Okay, you got to put in a pivot top. So a pivot top is where you make a high with lower high and lower low on either side. If you don't have that, you don't have a pivot top that's actually usable for a trade opportunity. So if we do have a lower high and then we break down below 83.20, you could short potentially down to the 79.96. And it's up to you how you want to set your stop loss. It should be above this high, or you can also use 1 ATR for the time frame in which you're trading on, which happens to be the 4 hour here. Now, if we take this down a little lower to the 60-minute chart, see if there's anything we can do there. You can see there's definitely some weakness that came in at the end of the week, end of the day, and end of the week on Friday. Don't really have any good zones here, and we are seeing a lot of weakness. Look at this. We're trying to make highs in price, but can't get above 60 on the RSI. That's extremely bearish. And that's telling me the prices are probably going to drop pretty soon, even though we made some higher lows and higher highs in price. So we can fine tune this again down to the 15-minute time frame. And we are just going sideways. There's really nothing going on there. As far as if we pull back, we might have some stumbling blocks, not strong demand zones, because we're on very low time frames. The first one we run into is right here, one right below that, and the drop base rally that began the move up. So honestly, don't expect a huge move, but if you're trading that breakdown on the 4 hour time frame, you're not going to be concerned about this, because these are on smaller time frames. You only concern yourself with higher time frames when you're trading out the lower, unless you're trying to fine tune an entry or you're trading on those lower time frames. That being said, if you're day trading this and you're looking at Sunday or even Monday morning, these might be a couple buy opportunities before we drop even more. But I'm kind of leery about going long, especially when the trend time frame, the 60-minute, looks so bearish. So I think that for the most part, I'm going to be looking for shorting opportunities going in the beginning of the week, but we just haven't had the opportunities set yet, because we need to find supply zones formed first before we get short. So that's what I'm seeing on crude oil. Let me go over to nat gas and take a look at what's going on in that energy market. So first things first, I'm going to clear up my chart. I've been doing analysis on this all week, and we're going to start off with the weekly chart and seeing nothing but topping tails. We're at all-time highs here, but we're seeing a lot of weakness that we can't make these, we had one higher close, lower close, slightly higher close. That's just a mess. So not getting any kind of signal here. We did have slightly higher highs, but not by much. And those topping tails are just very bearish altogether. So be careful with that. And we'll drop down to the daily time frame, see what's going on there. And on the daily, it looks like a head and shoulders. See that pattern popping up a lot lately. On the equity markets, now on nat gas. So this gives us a possible trade opportunity if we can get the neckline drawn correctly. Come on. You think with all the art that I do, I'd be able to draw a line properly. No. There we go. Okay. So left shoulder, head, right shoulder. And we can do a couple things here. We could look for a smaller time frame to be able to jump in on maybe a 4-hour time frame. As far as the measured move for a head and shoulders formation, it's the top of the head to the neckline, basically duplicated. So we extended down from wherever we end up breaking. So we haven't broken the neckline yet, obviously, but if we do break the neckline, we'll look to see if there's any sort of demand zone around that level. Might be a little lower. I don't see anything right here, but our target now for this head and shoulders, if it does break down, is right around 3.556. So we'll have to see if there's an entry point, or what you have to do is I don't trade the breakdowns. I typically wait for a close below the neckline, then a retest of the neckline kind of as resistance before I short. So get plenty of time, plenty of opportunity. Obviously, if you can ever short the right shoulder, that's the best opportunity because you're in early making profits as everybody else is jumping in on the pattern. So let's drop down to the 4-hour time frame and see what's going on there. And you can see that we had, big warning sign for weakness. And the one that jumps out at me is right here. You see, we made a higher high in price, but the momentum said, nah, we can't do that. Lower high, much lower high, as a matter of fact. And then to confirm the trend reversal, look at this. We made a high in price right here. But when you made the high in price, the RSI was below 60. That's your confirmation after negative divergence that trend is reversing. So on the 4-hour time frame, we are in a bearish trend, and we found our entry. We have a drop. Right there's your legging candle, base drop with follow through supply zone. 5.682, 5.837. Still the same target that we had on the daily chart, which is going to be way down there. Where are you? 3.556. So there you go. So you're looking at putting a stop above that area. It's up to you how far above. We can see that, if we go from 3.7, if I put it at 40 perhaps, we're just going to put it at 41. It's kind of a big risk if you're willing to take that. You can always do the micros too. Remember, there's some minis and micros in a lot of these. So that's $1,500 of risk. But again, you're talking about something on a higher time frame. It actually needs to be 82. There we go. And the target, as I mentioned, is actually quite nice. As you can see, 5.6. Nope, it's not going to let me get it exactly. 8.2, come on. That's close. So we're in the neighborhood of over $21,000 potential profit if that works out. Whew, wouldn't that be nice, right? And my PayPal address, if it does work out, is, no, just kidding. I do accept tips. All right, this is not recommendations. This is just educational opportunities and things I'm observing in the market. It's just my musings, okay? So, if you trade this, do it in simulated mode. I'm not responsible for any losses you might have. It's all on you if you take the trades. Disclaimer. But anyway, that's what I'm looking at is a possibility for a shorting opportunity because we definitely have a bearish trend going on. We can go down to the 60-minute time frame and try to see if we can fine-tune this as well. And not really. We're pretty much looking around the same. You have drop, base, drop, but the leg out candle went above. So I'd probably stick with that. Maybe you fine-tune it. I don't know. I don't like, I've never been a real big fan of zones where the leg out candle goes above the basing. There's drop, there's base, there's drop, and it followed through. If you're up for that and you want to trade that, that's on you. But I've had issues at times where, again, you're still looking over $1,000 anyway, and you're safer with the bigger time frame zone with more room. Yeah, it's $1,100. But if you don't mind that, where the leg out candle goes above the basing, then that's your zone right there. And of course, the same target overall. There may be some other targets along the way. I forgot to check that on the 4-hour chart. Let's do that. So I don't want to leave you without that. And looking back, let's see. Well, we do have possible demand here. Let's see. The close is 207. The low there, 210. So that's a zone. So we got one possible target there. Another possible target along the way. This will give you some opportunities to book some profits along the way if you choose. And then another zone. This is on the 4 hours. I was mentioning that shorting opportunity. And then, ooh, man, a lot of little zones along the way. There you are. So getting back to where we were, if you're looking to take that initial short, like I said, that was deleted because it was on the wrong time frame, but that's okay. I'll put it back in. What's this? 5682. That's already been cut through, so we're not going to use that. So actually, the first target is 4.959. That still gives you a really good reward risk ratio. Let's take a look. You got close enough. About $7,200 for $1,500 of risk. That's definitely livable, doable. So 60-minute, we saw that there's a possible fine tuning of the zone if you choose to. We can even take this down to the 15-minute time frame for those of you who want to day trade. And we actually do have a pretty good zone right here too. Take a look. You got rally, base, drop right there. Now, that did not have the follow through I'm normally looking for. However, what it did have is it broke prior lows on the move down. So I'm going to delete this for now. There we go. And now we can fine tune this a little bit more. 5699. Oops, there it is. And 73, that's good. So now we've got $740 of risk, and we take a look to see on this time frame. We do have a demand zone. It's a little weak right there. I would skip that one. Let's go back and see where we might be targeting if you're trading on the intraday 15-minute chart. And as we go back, oops, sorry, I don't want to skip anything. So never cut through candles. That's why I'm using, I call this my guideline when I put a horizontal line there, so I don't forget where the lows are and cut through candles. Oh, there's your target. Oh, actually, I take it back. This is not. I was thinking this was drop-based rally, but I realized it didn't follow through and didn't really breach the prior high, so I would skip that as a target. Let's keep going. I don't want to waste time and get out places that are not going to turn price. So you can see the Y didn't work because there was actually a reaction to a previous area anyway. So we keep going back, and it might just be that first 4-hour zone that we had. There's nothing here that's clean as a zone that's not already used up. So yeah, we're getting down to that first 4-hour zone that I had. Or sorry, that was a 60-minute zone. Where are you? Whoops. There we are. And this is a zone in itself, but it's already been tested. Drop, base, rally right there. Yeah, I'm thinking it's good enough to hold on. Not duplicate. I want to delete. Anyway, I'm thinking it's good enough to hold on to 4959. So if you're looking at a 15-minute time frame to reduce the risk here and get in on that short, 5.699 to 5.770 with a stop maybe just a few ticks above. Target number one is going to be, if we ever get there, 4.959. There you go. So jump over to gasoline here to take a look at that. So actually I want to keep this one where it is intact, and I'll bring in gasoline over here for the heck of it. So RB, and looking at gasoline when it loads up, go to the bigger picture here first. And I'm going to clean my chart, of course. Might have to go to a continuous contract here because we're reaching up to a huge high that we haven't seen in quite a while. So let's do that. I want to get accuracy here. It counts. So continuous contract. Let's see. When's the last time we've been paying this much at the pump? Probably back when I lived in California. I feel bad for everybody back there. Yep, 2014. Sure enough, it was. I moved to Florida in 2016. So I remember it used to be $5 a gallon. You went out in the desert on a motorcycle ride and you would even find $8 a gallon. It was crazy. I guess, if you're a European watching this, you're probably saying, shut up, Brandon. You got nothing to complain about, because in Europe, they're paying much, much more, but they do it by the liter, so we don't figure out what the number is. Anyway, rally-based drop up there, too. We got a couple of zones on the weekly chart. Let's see what that looks like as we're coming back to these areas. I think we're already above this one, but I'll make sure. So those are good zones. What happened there with that one? It was weird. I figured it was going to delete. I'm not sure what happened there. All right. There we are. What the heck is going on with this thing? All right, we'll do it differently. Different lines. Now, Excuse me, I don't really need that upper one anyway. So there we go. And you can see we've already exceeded this. Okay, that's fine. I just wanted to check. So our next area, we're coming up towards supply. And look at this, we're losing momentum. You know, we are above, but not as above as we should be. You know, we see we're barely above where we were before. So no divergence, but definitely some weakness coming in. So let's take this down to a daily time frame. Look a little bit closer here. And of course, now that line is showing up. So I'm going to delete all those lines I had. Really weird. And actually go to the contract specific, which would be RB3, 2021, and December, which is 12. So there we go. Slight adjustment to the numbers. That's why I want accuracy. We do have a daily demand if we do start to pull back. And it is right here. Drop base rally. Let's see if we got anything along the way. Yeah, nothing great. Let's see, the close or the high on this one is 32.65, and we have a close at 32.85. So that is higher. So we have rally base rally, but this did go below the basing candle. So I don't know if this is going to work very well as a zone. We're hitting it right now, but with the formation, I just don't like it. We also did start to form a zone up here as well. Curious, we hit a fib extension. We had, yep. Notice we didn't really react to the first one. We reacted to the second target at basically 100% duplication, and we're reacting right now to 1.272. So we're seeing a bit of a weakness coming in. We can also possibly then apply the retracements from the start of the move up to the high. And we'll edit that, see what it looks like. Okay, Pascal's nudging me. It must be his dinner time. Okay, so 76.4 and again 23.6. I'm going to fix that so it comes up automatically as default. There we go. And you can see we've retraced 23.6, but it looks like we want to keep pulling back a little bit. I'm going to delete this. And you can see where we might be pulling back to. Now let's go down to the 4-hour time frame and see if that correlates with anything. So on the 4-hour time frame, again, I'm having some struggles finding a good supply zone. We had good selling pressure coming out of this, but the leg out candle again went above the basing candles. So typically I haven't had a lot of success trading those. Some people do like them. I'll mark it off just to show you. Like I said, you've got really just one candle for the base. It's kind of weird. I don't like it. So I don't think I want to use that. I'll go to a smaller time frame, see if there's something that's actually there that I can use. And as far as our next retracement point, let's see, do we have any zones that line up? Well, we have drop base rally right here. And that lines up with, I think, our 50% retracement. So that's going to give us a target. Yep. Let's see, is that the 50? I forgot to put the labels in, but I'm pretty sure it is. Yeah, 23.6, 38.2, 50% retracement right there. You also have something at the 61.8. So I would expect if gasoline starts to tumble, unfortunately, it's going to find a little bit of demand at one of these levels, although this one's been tested. So that may not be the origin of the move. That's kind of interesting. That's not the origin of the move. It may not have enough buying power left to cause prices to go up. So we'll see what happens. We're getting definite weakness on this time frame. We had a divergence here. Notice lower highs on the indicator, and we're just collapsing. So same thing we had earlier. If you make a new low without making a high above 60, then we're going to be in full-blown bearish trend, which now leads me to see on a 60-minute chart, there might be a good trading opportunity. Let's see. Well, I don't have a good supply zone. Again, and the zones just aren't there. What is there? Let's clear the chart again. We'll find a target on this time frame later. But what I am noticing is that we had a very big impulse down, and the move that's occurring on the move back up seems to be, well, it's not going to be exact with the lines, but seems to be kind of like a bear flag, doesn't it? We're in consolidation. Because anytime you can encase price action within trend lines like that, that's usually a corrective mode, which is suggesting we should continue to the downside. And if it's true to form, usually you duplicate the previous move. So right there, the pole, if you will, it's not very vertical, but we should break down, and whatever the move is, oh, come on, it won't go any further. Go. That wherever it breaks, and we haven't broken yet, but hypothetically, if you break right around that area, we're looking at a move down to about 2.25, and 22548. So we may be able to trade that on the breakdown. What you do is, again, I wait for not just the breakout to the downside, but I wait for a close outside of that range, then a retest of this trend line as a resistance level, and then short. So that's what I would wait for. Wait for the retest. As far as the stop loss, it's up to you. You can put it above the highs, or you put it maybe one ATR above on a 60-minute time frame. I also then want to take a look back to see if there are any other targets or strong demand zones along the way, because we don't want to get caught off guard. And, well, we have a little bit of buying pressure right here. That's why we're reacting where we are. There's your next one. So we got rally, base, rally. And once again, looks like the leg out candle went below the basing, but that is a possible target, 22641, 22350. And in the middle of all that's where we have our actual measured target. So I would look for that possible breakdown and trade opportunity there. If we want to fine tune this a little, a 15-minute chart, we can do that. And we have a zone forming now, perhaps, but it's kind of long in the basing. We have drop, base, drop, really nothing else there. So let's stick with that 60-minute plan. And finally, might as well bring up heating oil as the last energy market to look at. Let's go ahead and start off with changing the symbol to heating oil. We'll go with continuous contract for the weekly first. I'm going to go ahead. I forgot to remove those moving averages. I use those as trailing stops from time to time. Those of you who have been in some of my classes understand what that's all about. So let's keep it clean there. There we go. And go to the weekly chart. So weekly chart on heating oil, we've got a real big high here. We've had, obviously, crude oil reaching up to new highs. We're going to have highs on all the derivatives from it as well. So going back in time, let's see what we've got. Oops, almost passed it. There it is. So we've exceeded a lot of the supply that we probably should have stopped at just because crude oil was so bullish. There's not really anything here. Next weekly level you're looking at, and we're back in 2014 already. It's right there. So let's take a look to see, is there any weakness we're experiencing as we're moving up? Not as bad. You can see we've made some highs here as we're making highs. So not really seeing weakness there. Let's go to the daily time frame. And the daily time frame showing the weakness. So we didn't see it on the big picture on the weekly, but on the daily we are. Price is trying to make new highs, but we're not getting the momentum needed to maintain those highs. We're getting close to the roll, aren't we? Oh no, it just rolled over on the continuous, that's why. Wait, what did it say it's rolled to? Oh, we're rolling over to the 2022 contract already. So, because they always roll over to the most liquid, so now we'll go to the contract specific. So, HO3, and we'll do 2022 in January. Make sure we look at the right contract. You always want to be looking at the one with the most volume. There's a couple of ways of verifying that. Obviously, you can check the volume. I typically also look at barchart.com and look to see which one has the most volume. So, as far as we're on the daily, not really seeing anything else other than still seeing the dive and the momentum. So let's go down to the 4-hour chart, see if there's any kind of an opportunity because, well, actually before I do, this is suggesting a pullback's in order. So once again, I can bring up my trusty Fibonacci retracements and see if that lines up with any sort of zones once I go to the 4-hour time frame. And 23.6. There we are. I might as well put the ratios in there as well. There we go. So now we got our ratios for our pullbacks. We've already exceeded the first one. So we go down that 4-hour time frame. And voila. So our first couple levels of demand have already been used. You had a rally-based rally right here that's already been tested. So we could have a pretty decent drop here. Now you see the basing that's going on. Once again, that could be considered to be consolidation. And if we break out that consolidation and close below it, you can possibly short the retest. There's also a drop, base, drop. But again, the leg out candle went above the basing. So I don't really like those. As far as targets, I'm not seeing anything good along the way as far as fresh demand. This one was already used. And I got nothing else. I can go down to a smaller time frame, maybe 60-minute. But on the 4-hour, your guess is as good as mine. I don't see a good demand zone other than the Fibonacci levels. And let's do the 60-minute, see if there's anything there. Excuse me. Bring this back. And I'll zoom in more. And it's kind of a wide zone and not a real strong rally. And again, it's all kind of coming off of that. So this would be your next area. Rally, base, base, and rally. And then, excuse me, drop, base, and rally there at the bottom. There we go. And actually that might be, nope, that's a reaction to this, I believe. So if we take a look at where we are currently and what's likely to happen, I'm still thinking that we're probably going to be better off looking for the breakout of this sideways consolidation and trading a retest of it. I don't see how these Fibonacci levels are really going to help us much. They didn't really correlate with anything. And I would say our first target may be right here, the 23379. So unfortunately, if you place your stop above the high of this, you're not going to have a good reward risk ratio. So the alternative would be you go in and bring up average true range on the 60-minute time frame. There we go. So the average true range right now is 0.0150. So you add that to your entry. So if you're entering on a retest of 24323, I'm going to do this in my head. 2.4323, you would simply add that average true range of 0.0150, and your stop loss should be 24473. So you can place your stop 24473 or thereabouts. Change the color there. Again, what this is contingent on is a close below. Get rid of that ATR to get a bigger chart. But you need to close below the 24323, and then you basically sell the retest of that area with the stop loss above. So that gives you a risk of, it could be 74. Come on, don't do that. 23, close. Close isn't good enough. 2.3, and that should be 7.4. There we go. So 634.20, and then your target is here, 79. Oh, kidding me? Come on. Oh, it's two ticks off. It's okay. So we're roughly in the neighborhood of about $4,000 for the first target, and the second target down here at 14. There you go. So that's what I'm looking at in the energy markets. If you want to fine tune even more, you can go into the 15-minute chart, but I don't think that's going to help right now. It's just a mess. So I'll stick with that 60-minute swing trade this. That's what I got on the energy market. So thank you for being here, and I'll talk to you again soon.